Good morning, folks. I'm playing with charts this morning, and I just wanted to put a friendly reminder out there. If the market, whatever market you're interested in, if it's not behaving the way you would prefer that it was behaving, I'd like to suggest backing up and looking at a bigger picture, because I find for myself that the bigger picture helps me calm my mind and my nerves, and it serves as a reminder as to why I'm in the market in the first place. And so anyway, this morning I'm looking at, this is a monthly chart of gold. This is potentially a head and shoulders pattern, and using the technique of Edwards and McGee. If you're a technical analysis nut, that's the Bible. And so anyway, using their methods, we get a tech target, an interim target at 2685 or so. And of course, because our neckline in this case is slanted, there's a fair amount of interpretation as to how exactly you would use the prediction method in this case. I prefer to be as conservative as possible. So this is a conservative estimate using a head and shoulders pattern and Edwards-McGee techniques. We should notice, or one of the things, is that this is a 9-year long pattern. You know, this is a significant movement in the precious metals market. It always catches my attention when I see other market analysts and they're referring to this as a 20-year bull market. And if you think in those terms, with this just being the mid leg, you know, the correction, we got an up leg, correction, now we're almost ready for the next up leg to start. That's going to be a big up leg. And so anyway, interpreting this as a 20-year ongoing bull market in the precious metals is interesting. It just occurred to me it'd be interesting to compare this chart against any number of charts from the Federal Reserve, money in circulation, federal debt held on the Federal Reserve's books. You know, all of those charts are becoming more and more interesting. Let's continue to browse through some other prediction techniques if we want to talk about what are the potential long-term targets in gold. So Andrew's pitchfork obviously is my preferred technique. So shift fork on a monthly time frame, two targets of interest, 2320 and 2880. And so there's the, 2880, 2685, same kind of ballpark. This is the target that I find interesting, is in this 2300 range, because my expectation is that once the current rally is allowed to proceed, the next target is at least 2300. And of course, that's part of why the next up leg in gold is being held back, is because it's quite obvious that the next target is 2300 or higher. This is head and shoulder technique again. That's the same thing that we just looked at, a little bit different. I like to start with clean charts. And so one time I do this and I got 2765. This morning I did it, I got 2685. So here's a Fibonacci extension. This really is looking at the gold market in the time frame of the 20-year bull market, because our origin, or our first pivot using Fibonacci extension, is back here at the start. 1999 was the start of that rally, and then that's late 2011 for our B, and then this is the bottom, late 2015. So we are considering, in this ongoing 20-year bull market now, where is the next target? And so we get a couple of targets here. There's that 2300 and change again. There's 2700. This chart is a little bit messy, and so rather than try to interpret it real time, we can just look at the results. What we're doing here is we're basing on the previous two major up legs in gold, one in 69 to 1980, and then from 99 to 2011. And we look at what was the multiplying factor from the starting point to the finishing point. And then we apply those same multipliers based on the starting point in our current bull market. And we're making the assumption that it was December of 15, gold was at 1046, that was the bottom. So we apply those multipliers to that bottom and we get these targets. And parabolic, this is really, there's no science involved here. This is just, I threw a curve tool on a chart and I start playing with it. So the parabolic chart is really, it's just kind of a fun visual thinking tool, although it does give us that 2700 target again. And then if we consolidate all those different techniques, this is the reason that I did those charts, was to get to this. I wanted to see if there were any common price targets among the different techniques. What we find looking at these results is that around 2300 and 2700, we have clusters or more than one technique predicting those kind of prices. Again, I'm expecting that 2300, that's our next target as soon as gold is allowed to advance in its current bull market. Clearly, the precious metals right now are bullish. We continue to have paper selling in both gold and silver. And, you can explain that any number of ways, and we don't need to try to explain it. It's happening and it's having an effect on the market. So, but you can't stop the tide from coming in. I hope you have a fantastic day and a profitable day too. See you soon.